In this video, we're technically analyzing US30, which is also known as the Dow Jones Index. And without wasting any further time, let's get straight into the actual analysis. The last time we spoke about this actual chart, we had spoken, or rather mentioned, that we have what seems to be a channel at this point, and this indicates that market is in a downward trajectory, and that chances are we're gonna see the market from where it is move further down to around this level over here. And that is because, as I've just said, we are in a downward trending market. And another reason that motivates for price actually moving further down to around the level that I've just pointed out is that if you pay attention to this area over here, right, we had a third rejection at this point, and you guys know that whenever we have third rejections on trend lines, what normally happens is we get a reversal of sorts. And I believe that in the future we will see the market push further down to around this level over here, right? Why do I say this level? That is because, guys, if you actually zoom in closely, you will see that we have what seems to be a W structure over here. And I have mentioned to you guys in the past that whenever we have these W structures, what normally happens is a lot of traders and investors buy on that second leg of that W structure, and they place their stop losses just below. And especially institutional traders such as banks, insurers, and so forth. And as I've said, we might potentially see the market push further down to grab all of those stop losses that are located at that level. To add to this, guys, as much as we have this W structure over here, just also bear in mind that we also have a neckline at that point of this W structure, and that we might also see the market actually push further down to around where we have the neckline of this W structure, and then from here only push further up. But long term, I believe that we're likely going to see the market push further down to around these levels to grab all of those stop losses, right? And that is because, as I've said, guys, we're in a downward trajectory in as far as the US30 index goes, right? So anyway, let's zoom in and see what else is happening in regards to this particular chart, which is the daily chart of US30. Let's just zoom in. Let's have a look. So what else do we see, guys, in regards to this particular index? In fact, before we proceed, I just want to add a neckline for this W structure over here, so just bear with me while I do so. Let's have a look. Right. And we could say that the neckline of our W structure is at this level over here, more or less. And just remember that necklines are areas and not so much actual lines, right? And as much as we have the neckline of this W structure, just also note that we have an opposing structure in the form of a double top over here, which has a neckline at that level as well. And what we expect at this point is for the market to head back to the neckline to test it, and if it does so at the neckline is where we will likely look for those potential selling opportunities. And our first take profit, I believe, should be around this level over here, where we have the neckline of this W structure, and which is also a very strong level of support at this point in time. So I'm just going to add a neckline for that M structure as well, and just bear with me while I do so. There we go. We could say that this is the neckline of our M structure, and it's actually an overextended M structure. If you look at it, it's an overextended M structure because that first leg is much higher than that second leg, as you guys can see. Nonetheless, it's an M structure, and as I've said, it has a neckline at that level, more or less. So what I'm going to do now, guys, is to utilize the Fibonacci retracement tool just to see if, should the market from where it is retrace back to the neckline, does the neckline actually align with any key numbers that we have on the Fibonacci retracement tool. So just bear with me, guys, while I do so. Let's see Fibonacci. Let's have a look. Let's see. There we go. So we can see that the neckline, which is over here, more or less, of this M structure aligns with, we could say, both the 50% as well as the 61.8% Fibonacci retracement levels, which are very important levels in as far as Fibonacci goes. And what this means is that we have confluence in as far as looking for potential selling opportunities at that level, should the market from where it is head back to the neckline to test it. And as I've said, at that level is where we would look for those potential selling opportunities, and that is because number one, we have, as I've said, the M structure. Number two, we have the neckline being broken to the bottom side. Number three, we would then have price heading back to the neckline to test it. And number four, we would have the neckline aligning with both the 50% as well as the 60% Fibonacci retracement levels, and that's confluence in as far as looking for potential selling opportunities at this level goes. To add to that, I'm not necessarily saying that we should just sell by virtue of having the market reach those levels. We should look for further reasons, right? Anyway, let's proceed and see what else is happening in regards to the daily chart. Let's have a look. At this point, I don't see much. What I will do now is head down to the H4 chart. However, before I do so, rather, I would like to point out that where the market currently is at this point in time, we seem to have a very strong level of support, and that is because we've had many rejections at that level, as you guys can see, and we might potentially see price from where it is actually move further up to around the neckline perhaps. And if it does so, indeed at that level we would look for further selling opportunities, and our first take profit, in my humble opinion, should be this level. Having said that, just keep in mind that I spoke about how we have this area over here, which is carrying all of those stop losses that I spoke about, due to the fact that we have this W structure, and a lot of traders and investors actually buying on the second leg of that W structure and placing their stop losses in that box more or less. And in the future we will see the market, in my humble opinion, most likely move down to these levels over here, right? Anyway, from here what I'm going to do is head down to the H4 chart, as I've just said, and here we are on the H4 chart. On the H4 chart, I'm just going to fix my channel somewhat, and let's have a look. There we go. We just need to ensure, as I always say, that our channels or whatever drawings that we do add to our charts are as accurate as can be, just to ensure that ultimately at the end of the day, if we do execute, our execution is also very much accurate. So let's zoom in and see what else is happening in regards to the H4 chart. In fact, before we continue, I just want to start off by adding my H4 channel on the H4 chart, and let's see, how would I add my H4 channel in this regard. I would add my H4 channel in this manner. Just bear with me, guys, while I do so. For now, I would add my H4 channel in this manner. Let's see, let's have a look. Right, there we go. And just to recap, remember, on the daily chart we spoke about how we have this overextended M structure, which has a neckline at that point, and we all said that we would love to see the market actually, let me just zoom in a bit, from where it is actually move further up to around where the neckline is, and if it does so at the neckline is where we would look for those potential selling opportunities. And that is because the neckline is a very strong level of resistance, and number two, it also aligns with, we could say, both the 51.8% as well as the 60% Fibonacci retracement levels, right? Having said that, should price from where it is head back to this level, we're not just going to sell at this level. We're going to look for further reasons for why at that point we should be looking for further selling opportunities. Nonetheless, having said that, it's a good area to be looking for potential selling opportunities, in my humble opinion, right? So here we are again on the H4 chart, and what do we see? Remember, also spoke about how we have a very strong level of resistance, or rather support, where the market currently is, and that is because we've had multiple rejections at that level. And what's happening right now is that a lot of buyers actually have come to the party, and that is because they have bought at that level, because they see that we have a very strong level of support. Having said that, my bias at this point in time is for the market to move further down, right? Anyway, let's proceed and see what else is happening, right? What else do we see on the H4 chart that we should be paying attention to? At this point, I don't see much, guys. I don't see any buying opportunities or selling ones for that matter. Nonetheless, I would love to see the market actually head up to this level, and if it does so at that level is where I would look for further selling opportunities. And as I've said, my first take profit should be, I would say, this level over here, which is the neckline of this W structure, right? Yeah, and I believe also in the future that we will see the market head further down to around this level.